Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani here, and I'm back with you to, in this video, answer some pertinent questions and address a worry that some of my viewers might be having. Is the market looking top heavy? Is the bull market looking a bit tired? And if yes, where do you invest in such a market where if you invest and the market starts falling, the fall is smaller than the broader markets, and whenever the market starts to rise thereafter, the gains are bigger than the broader markets. Now, on 1st of April, I had recorded a video. If you care to go down in this playlist, the title was, If the Markets Fall, I Will Do This. I followed it up with another video on 20th of April 2021. The title of the video was Top 3 Nifty ETFs to Buy Now. So obviously the 1st of April video that I recorded with the title If the Markets Fall, I Will Do This, I was talking about buying index ETFs, particularly Nifty ETFs. Now, if you care to watch these videos, you will basically understand the logic as to why I have said what I have said. But in brief, I will tell you that the Nifty comprises of 50 stocks with different variable weightages, and the weightage is telescopic. Just like in the olden days, you used to have a helical antenna in your pocket transistor radio. You could extend it and then collapse it inside. The weightage of the stocks in the Nifty fluctuate from month to month. So if the stock is gaining in 1 month, the next month the weightage in the Nifty is increased, and vice versa. Which means the Nifty and the other indices are geared not to fall as much, and in a rising market rise further. Do watch these two videos for greater details. For now, I'm going to tell you another investment opportunity in the index ETF space that I have identified for you. And I feel this opportunity offers potentially higher returns on investments than the Nifty ETF. Friends, I'm talking about the Nifty Alpha 50 Index ETF. Now, you basically have two Nifty Alpha indices. One is the Nifty Alpha 30 and the second is Nifty Alpha 50. I have looked into the composition of both these indices, and from my point of view, of course, I feel that the Nifty Alpha 50 has a better composition and more prospective returns with lesser volatility. You see, as an investor trader, I want three things in my investment. A, the highest possible returns. B, in the shortest possible time. And more importantly, C, at a reasonably controlled threat perception or risk level. So between the two, the Nifty Alpha 50 and the Nifty Alpha 30, I feel Nifty Alpha 50 comes closer to my checklist, and I'll give you a lowdown on what it actually comprises of. First of all, as you can see on your chart on your screen, the Nifty Alpha Index has quadrupled from the low that it made at 8,673 in March of 2020, when the entire market collapsed after the COVID lockdowns were announced. It went up to 34,771. That's like almost quadrupling in October 2021. And what I like about the composition, like I told you, was the information technology or IT has a weightage of 27.18%. Power sector has a weightage of 10.27%. Healthcare has 9.69%, and oil and gas has 7.13%. The list is not exhaustive. Obviously, if you total them, they do not come up to 100%. There are other sectors, but since these sectors are very heavily weighted and they seem to offer a great deal of potential for appreciation, I feel the Nifty Alpha 50 itself should rise. And as you saw in the chart, it's not reacted half as much as the Bank Nifty or even partially. Forget about half, even a fraction of what the Bank Nifty has fallen to, and not even half of the reaction that you saw in the Nifty 50. So it's insulating me from a downside whenever the markets are looking a little weaker. Now, what does it look like in terms of returns? Now, let me assure you, let me caution you rather, that past performance need not be an ideal proxy for future returns. But let's see what this index has done. Year to date, as I record this video, it's returned 62.5%. 12-month trailing, it's returned 68.98%. And over the last 5 years, it's returned 29.23% on a year-on-year basis. So you can see that the returns have been fairly robust, above average, and I would call them mouth-watering. So the Nifty Alpha 50 Index ETF will provide you double-digit returns, and if the past is anything to go by, 20, 25, 30%, if all goes well. Of course, this is a market, it's like a military operation, nothing goes as per plan. There are always hiccups along the way, but hey, we traders are brain warriors. We win with our ideas, and our idea and our brains tell us that we are dealing in probabilities and not certainties. So the probability of making money from the Nifty Alpha 50 ETF is far higher than the probability of losing money or even earning mediocre returns, which is why it's called Alpha. Alpha, like I reminded you, is above average or super fast excessive returns. So, my friends, I'm very optimistic that you take delivery of this ETF. You're going to outperform the broader markets over a long period of time, because this is a delivery-based investment. It's not a trade. It's a 100% delivery instrument, no forward trading here. And I've received feedback from my friends who've invested in the Nifty ETFs and they are fairly happy about it. Remember, I made that video almost 8 months ago. You're going to do even better in the Nifty Alpha Index in terms of returns. On this happy note, I wish you a happy new year in advance, and I wish to remind you to click like on this video if you liked what you saw. Do subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I love to hear from you in the feedback space, and help me reach out to fellow like-minded investors and traders by referring my videos to your family and friends. Thank you for your patience and watching my video. I wish you have a very, very profitable year ahead. This is Vijay Bhambwani signing off for now. We meet again in my next. Take care. Bye-bye.